Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm trying to get you what you need to know before you go, and let's get started with some economic data. Then we'll talk about the markets, wrap it up with some option strategies that we might be able to implement into our portfolio based on those assumptions we come up with. All right, so without further ado, let's get on with it. Yesterday, I came on a little bit earlier than that economic data point for this consumer price index. Remember, I thought it was going to come in a little bit hotter than expected. I thought the main number, core CPI, the main CPI number was going to come in around 0.7%, came in 0.6 versus 0.4. But when you strip out food and energy, that number came in at 0.6, expected to be 0.5. So we expected to see the core move a little bit higher to around that 0.6. Remember, I was talking about that yesterday, but I also thought that the CPI, the regular number with food and energy in there, would be an uptick as well. These numbers came in hotter than expected. Folks, it's the hottest numbers we've seen since basically early 80s, 1982, I think it was. If you remember, in 1979-ish was really when we had the shortages in oil, lines at the gas station, all of that stuff. Well, we're starting to see that type of inflation start to happen. If we start to look over here at the markets here, we can see that crude oil is starting to climb a little bit higher again today. You know, we were looking at this rollover, and I was thinking we were away from those 90s for a little while, away from that $4 a gallon at the pump. Well, looks like that $4 is going to be another real number that we're going to be looking at as inflation really grabs hold here. The rising fuel prices is going to drive prices higher for everything else. If you have a delivery, they're going to add in a delivery charge to that. If that delivery charge is being charged to you, think about it. That's going to increase your cost of goods there. So that's where inflation starts stemming from. Here we got bonds. After yesterday's economic data point, started really getting these Fed governors talking and ramping up their rhetoric on these increased interest rate hikes. All right. So all the way to June, we're starting to see that some folks are even talking that we could be close to 1.5% to 2% in the 30-day Fed funds rate. Think about this yesterday, folks. 10-year yesterday was just approaching 2%. So when we're talking about higher interest rates, this is going to ramp up very quickly. Higher interest rates in the 10-year being at around 2%. Now the Fed funds going to be ramped up to 2%. That means 10-year, folks, is going to be probably 3-4% by the end of all this, middle of the summer. So what does that say for the bonds here? Well, the bonds are going to continue to slide. We talk about this all the time. It's a teeter-totter, folks. As the bonds start to go down, if bonds go down right here, and the other side, teeter-totter, goes up, that's the interest rate. So as bonds point down, interest rates point up. That's exactly what we're seeing right here in the overall markets. Bonds, the price is going down because, and the flip side of that is the interest rates are going up. One thing to note here, how do you counteract a falling price in your portfolio? Because, folks, you got about 50% of your portfolio, especially if you have a 401k, in bonds here. So we need a lower overall cost basis on those types of assets in our portfolio. Talk about that in these videos. So please check those out at the webinars. Go to Pro Trader Strategies here on YouTube and find those videos on covered calls around bonds, lowering cost basis on bonds in your portfolio. All right. Higher inflation, that's going to drive markets like gold. We've been talking about risk is to the upside in gold and in Bitcoin, despite the fact that Bitcoin's been seeing some weakness here, coming back to the 61 Fibonacci. You know, there's a point of control just slightly higher than that for time. That's where we probably will settle down a little bit. I'm expecting risk to be to the upside in Bitcoin right now. Guys, equities are going to be so hard right now because we're still waiting on all these earnings to come out, shuffle all of that out. Yesterday's sell-off was really exacerbated by these Fed governors talking about higher interest rates sooner than later, and the tantrum started happening yesterday. We're finding a bit of some support here. We talked yesterday again. NASDAQ right now is at the point of control. That's where the time and volume has been spent. That's where the market perceives value. What does that say? Well, it says, folks, that we'll probably sit here and consolidate around this area until we get some economic data that pushes us in one direction or the other. But as of right now, it's kind of a wait and see pattern. You can see with the E-mini S&Ps, again, there's not really point of control, but we do have our Fibonacci line here. It's really, folks, I think going to want to maybe consolidate, slide a little bit lower, but really I think we'll build up some volume nodes right here at around 45,000, all right? If we look at the E-mini S&Ps on the daily chart, a bit of a whipsaw here in the equities. First was the equities selling off because of that CPI number, a whipsaw reaction there. And then what happened? Well, all the Fed governors, even Powell was speaking yesterday, and that caused the markets to really start to slide as they ramped up the talk about raising interest rates. So with the end of the day here, or going into the last day of the week here, what I would say for you folks is risk is to the upside in any asset denominated in dollars. So risk to the upside in crude oil, risk to the upside in something like gold or even Bitcoin as a retainer of value, as folks are going to start shuffling money here, rolling out of some of these higher risk, high flyer equities like in the NASDAQ that they did very well in 2021. And now they're going to be looking to book some profits there, put money into safer haven assets. Like I said, gold, dollar denominated things. We could start to see a little bit of negative reaction there in NASDAQ, or at least selling pressure in NASDAQ while the buying pressure filters into things that are retainers of value, blue chip stocks, things that are going to be in the Dow Jones Industrial Average. I don't think it's going to last very long, but once we get past the summertime, we probably will see another sector rotation start to happen there. All right. So that's about all I got for you guys. Good luck trading today. One thing to check out, I'm going to be with Steve Primo this afternoon or a little bit later, few hours, talking about strategy number 4 and how we can implement options around some of Steve Primo's technical analysis. All right. So if you can't take that, take it easy.